Today I want to talk about 3 SPAC mergers that I feel show great value in the current market and one that has very high risk attached to it. SPACs have been taking a bashing for months now, but not all SPACs are bad. We had a SPAC boom over the past 2 years and there was a lot of overinflated valuations, but that does not mean that they are all bad. And now what can be seen as very good SPACs with proven teams behind them or great target companies have fallen to very attractive prices. Before we get into the video, if you like the content, can I ask you to smash the like button? It literally costs nothing, but it helps me out so much. I'm aiming to get 300 likes on this video. Help me make that happen. It shows me that you want to see more content like this, but it also helps the video get seen by showing the YouTube algorithm that viewers like this type of content. Subscribe to the channel if you're new and hit the bell notification so you never miss a video with the potential to make you money. Leave a comment down below if you are invested in any of these companies and what price you bought at and what is your price target. If you want to support my work and get access to when I find new opportunities for only a fraction of the cost of something like Netflix, then check out my Patreon. During 2021, I posted about several stocks that went on to make huge gains, and I will be adding far more to these in 2022. As always, this is not financial advice and I'm not a financial advisor. I highly recommend investing only money that you can afford to and always do your own due diligence when investing. Now let's get into it. First on the list is CFVI. This is the Cantor Fitzgerald SPAC stock number 6, and back in December, CFVI announced an intention to merge with Rumble. This merger is expected in the second quarter of 2022. The combined company will be called Rumble. Shares will trade on Nasdaq under the symbol CFVI until the closing of this transaction. Rumble was founded in 2013 and has begun to gather a lot of attention over the past couple of weeks. Rumble is a high-growth, neutral video distribution platform and has created an independent infrastructure that is immune to cancel culture. Rumble's mission is to restore the internet to its roots based on freedom of expression and creativity. Rumble's monthly user count has experienced rapid growth since July 2020 from 1.6 million monthly users to peak monthly active users of 44 million in Q3 2021. During this time, Rumble has also seen a 43-fold increase in engagement and minutes watched per month. We can clearly see on this slide where Rumble is positioning itself. Where Twitter, Facebook, Instagram or YouTube have shifted towards a high censorship model, Rumble is focusing on being truly neutral in order to bring back that freedom of expression and creativity. Rumble have signed a number of high-profile personalities to their platform, such as Russell Brand. Matt Kohrs switched exclusively to Rumble from YouTube back in January. And you can see here also Donald Trump, who I will speak about in just a moment. As part of this SPAC merger, CFVI shareholders will own approximately 11.5% of the overall company, therefore implying a pro forma enterprise valuation of $2.2 billion. Now this is assuming a $10 share price for CFVI. The share price is currently at $14, having reached as high as $18.52 earlier this week. And we can see that this is a very low valuation compared to the companies that Rumble is looking to rival, such as Meta, who has a market cap of over 1 trillion, Netflix 300 billion, or YouTube owner Google with a market cap of nearly $2 trillion. Interestingly, this remark by Joe Rogan is on the investor's presentation, which leads me on to why exactly the share price spiked this week. As I'm sure everyone is aware, Joe Rogan is signed to an exclusive $100 million deal with Spotify, and then last week there was a lot of controversy. This led Rumble to offer Joe Rogan a similar deal to switch to the platform, which did see the share price rise up early in the week, but fell sharply on a report that Joe Rogan said he has no plans to leave Spotify, who have stuck with him in recent weeks. But Rumble does have the support of former President Donald Trump, after former President Trump's media company recently signed a deal with Rumble, which will provide video and streaming for Trump's new social media network. Trump's company also said the two firms are in exclusive negotiations for Rumble to provide infrastructure and video delivery services for TMTG's subscription video on-demand product, TMTG Plus. Now, Trump's new company, TMTG, or Trump Media and Technology Group, is also in the process of going through its own SPAC merger. This is something that I've been following on the channel over the past few months. TMTG is merging with the SPAC DWAC. If you don't know about DWAC, I will quickly go over it now, but for a more detailed view, check out some of the videos that I have linked below. Trump Media Group is the latest company to be set up by former US President Donald Trump and is planning to be a uniting force for freedom of expression. The company will operate its three main brands, Truth Social, TMTG Plus and TMTG News, with a clear vision for the company going forward, and that is to rival big tech. Big tech platforms demonetize, throttle and cancel those who stray from the mainstream narrative. They are not just censoring content, they are determining what can and cannot be said by controlling how information is shared. They control the narrative, they control the future. To counter this, TMTG intends to even the playing field by providing people with open media platforms where they can share and create content without fear of reputational ruin. Now, I do feel that TMTG could be a huge success and Truth Social will be huge, but I consider DWAC to be extremely risky at the current price. Right now, DWAC is trading at $82. This is far below its high of $175, but for me it is incredibly risky for a number of reasons. When I was making my previous DWAC videos, the stock was well below its current price with huge upside. I would be far more inclined to buy shares of TMTG immediately post-merger rather than to buy DWAC at this price. And my reasons are simple. Guys, if you appreciate this type of content, please smash the like button and help me grow this channel. It takes a lot of work to put these videos together. Your likes really help keep me alive on YouTube. First, there are reports that SEC approval is unlikely for the Trump Media merger deal. This would be a disaster. When you buy shares in a SPAC, you own shares in that SPAC, not in the target company, until the deal is completed. If the deal was to collapse, then DWAC share price of $82 would crash back to about $10. But I have to stress here that I do not see the SEC stopping this deal. It is a possibility that you need to be aware of, but a remote one in my opinion. However, the ability of the SPAC team to get the deal done does concern me. One of Patrick Orlando's other SPACs, BENE, failed to get over the line in time and was only saved from liquidation by a shareholder vote to extend the deadline. Now, this really does concern me. Although I don't think that DWAC will encounter the same issues, there is a lot to lose when the share price is over $80. The next SPAC on the list is one of my favourites, GGPI Gores Guggenheim, that is bringing Polestar public in the first half of this year. GGPI is headed by billionaire investor Alec Gores, who has a good record when it comes to SPAC mergers. Polestar is a global pure-play premium electric vehicle company based in Sweden, aiming to achieve net zero greenhouse gas emissions while leading the development of new technologies. Unlike lots of other EV companies, Polestar have key partnerships, but also already have global operations with the production and sale of two EVs that are already on the market. Polestar hit its sales target of 29,000 vehicles in 2021, and the company projects to make $3.2 billion in 2022 and $17.8 billion by 2025, with over $2 billion in EBITDA based on delivery of 290,000 vehicles, which would make Polestar one of the biggest EV companies by 2025. The Super Bowl is taking place this weekend between the LA Rams and the Cincinnati Bengals, and Polestar has just announced it will debut its first ever Super Bowl ad during the game. For a lot of people who have not even heard of Polestar yet, this will provide a massive increase in interest in the company. And in just the past few days, Polestar has just filed another amended F4. Apparently, a third round of reviews is necessary. It will take the SEC approximately 10 to 14 calendar days to deliver their comments. That being said, a merger in Q1 of 2022 is becoming under pressure. So it'll be interesting to see if we get an announcement on this soon. Personally, I expect to hear a merger date very soon, and I see the Super Bowl as a clever way of generating more interest immediately prior to the announcement. The final SPAC on my list is FMAC, FirstMark Horizon Acquisition Corp. This SPAC is merging with internet service provider Starry. FirstMark Capital are technology investors who have spent decades successfully guiding companies from inception through IPO with $2.2 billion in total capital commitments. FirstMark Capital has backed entrepreneurs that have created many leading companies including Shopify, Airbnb or Discord to name just a few. Starry is deploying gigabit-capable broadband to homes without bundles, data caps, or long-term contracts. Starry is currently available in several states and is expanding nationwide. Starry just announced its fourth quarter operational update, exceeding targets and demonstrating strong year-over-year growth in customer relationships and network expansion, and increased penetration in its existing footprint for the second consecutive quarter. Despite this growth, Starry remains tiny in comparisons to major industry competitors and could provide huge growth potential. So guys, that brings us to the end of the video. If you appreciate this type of content, please smash the like button and help me grow this channel. Drop a comment and let me know what you think of these SPACs, or is there any SPAC that you have invested in that I should take a look at? Comment below. If you are a long-term viewer and would like to support my channel, check out my Patreon page where I am bringing you the latest stock ideas that I believe will make big gains this year. This is not financial advice and I am not a financial advisor. I highly recommend investing only money that you can afford to and always do your own due diligence. If you're new, subscribe, turn on notifications and I'll catch you in the next one.